Hello, everybody. Welcome back to another Market Open. It is December 1st, 2023, 8:45 a.m. And we're in December, folks. It is officially December. Kind of crazy, right? The end of the year is here. This year, I think, was pretty fast. There were parts of it that were obviously slow. I remember what January felt like, January 2023. I'm sure all of you do as well. And it's just been 11 months since then. And now we're here in 2023 at the end of December. So it's been a crazy year, been an exciting year. Lots of different stuff happened. I think everyone's kind of ready to get into the new year and get through 2023. It's not like 2022 or 2021 where you were just like dying to get into the new year. You were so done with those years. I think this was a good year. Obviously, stock market had a pretty good year. We got 4 weeks left to make sure that stays the case. But in general, it's just kind of surreal that 2023 is coming to an end and we're getting into December. And as a result of that, we've got a lot of stuff to talk about today for what is happening or what did happen, at least yesterday, on the last day of November. One of those things is that the Cybertruck is out, folks. Tesla Cybertruck, the car that for the Tesla bulls is going to take Tesla to new heights, new momentum, and really transform the business, is officially out. We're going to cover that, talk about that Cybertruck, pricing, deliveries, what does that mean, and how the market's going to react to it. Market is down about 4% from yesterday, 234, down from 250. So if you played Tesla from 235 to 250, which I bought 5 shares at 235, so I was up for a little bit. And if you put in a lot of money at 235 and rode it to 250, you made some money. If you were starting to buy at 250, you are now holding a bag because Tesla is down from 250, which is usually what happens after Tesla announces something, right? Their stock just drops because the street's not that excited. So we got Tesla that we got to talk about. Michael Saylor's MicroStrategy buys more Bitcoin. And now I wanted to talk about their debt because I saw a really interesting point around how their debt could be potentially financed with their Bitcoin. So want to talk about that, trading at the same realm of Bitcoin. And speaking of Bitcoin, we've got a 52-week high on Bitcoin, $38,600 on the coin of bits. Bitcoin, it's a 52-week high today. Very exciting for the crypto companies. They've had a great run up this week, so they're kind of calm this morning, even though Bitcoin hit 52-week highs. But that is something to notice as we get deeper into the end of the year and Bitcoin continues to do better. So we've got a lot to talk about. Let's get into it. Trucker Rob, good morning from Chicago. Trucker Rob, thank you for being here. Kevin, West Coast Brands, Ty Gordon, I Show Sad, Alex, Zach, SM, Miami Ren, driving down Key West and listening to Legit Amit. I appreciate you, Miami Ren. Enjoy Key West. I went there once with my family back in like 2014. Beautiful, beautiful place. Jason, Sethy Roth, Jocelyn, Just Jeff, Marcus, Peter, hi, Amit. Can I have your signature? Ironically, I was talking about my signature last night. I'm going to show you guys what my signature looks like because it looks kind of, I like it. I made it when in 2012 and I was like, all right, this is my signature, but it kind of also just looks dumb, but I like it. David, Han, Soria, Missia, Brad, I Get Paid to Wait, Morrow, Midwest, Eeyore, like, it is Dan Ives Day, correct? We're going to do a separate live stream for Dan. So Dan's going to be here at 11:15. It's going to be later than I expected. And I realized that it's probably best to just separate those and make those 2 different live streams, especially because I don't know how long we're going to have him for. And I didn't get full confirmation until this morning that he was definitely coming. So because it was kind of little late notice on that, 11:15, I'll be live again for anyone who can join. That's awesome. If you can't join, you can catch the replay. And hopefully we'll get good 25 minutes with Dan talking about everything in the world of stocks, especially Palantir. Erwin, Tabor, Delty, Jude, Bay Ray, Christian, Jayberg, Santa Claus is coming to town. It seems like that's the case. Natalie, Jared, Toto, Joseph, Doug C. Thank you all for being here today. I think let's get started. Amit, why didn't you buy Tesla at 100? I was buying Palantir at 7 to 8. So that's kind of the main reason. And on top of that, I wasn't as bullish at Tesla at 100 as I am at 235, which that's why I don't deserve the gains of Tesla buying at 100 because I wasn't as bullish as I should have been. And you live and you learn. You know, you got to kind of deal with that. But I was buying Palantir at 7 to 8 during that time. That was kind of the main thing that I was buying when the market was down. So, that was the issue. Ray, Kelly, thank you for being here. Felicia. All right, let's get into it, folks. I think the first thing we got to talk about is this Cybertruck because this Cybertruck is really, really important. So Cybertruck comes out yesterday. Stock doesn't do that well, but regardless of the stock, I think there's some core things about the Cybertruck that are really interesting and we got to definitely discuss. Number one is the pricing and availability. So the lowest end model, when you factor in all the savings, will be under $50,000. Now it's right under 50 grand. most people, if they don't have certain savings applicable to them, then they're not going to be able to get that that type of a model. But nonetheless, that is something that's available. 11:15 a.m. Eastern. Yes, that's correct. When 11:15 a.m. Eastern, that's when we'll have the NFs. So 50 grand with potential savings available in 2025. So that's going to be 250 miles, 6.5 seconds goes to 0 to 60. The second one is going to be around 70 grand, all-wheel drive. This is going to be in 2024, 340-mile range, 4.1 seconds, 0 to 60 miles, 112 miles per hour top speed. Obviously, a lot of different, features involved in it. And then the biggest one is about 100 grand, the Cyber Beast at 96,000 with your savings. These are the actual prices. So 60 grand for the base, 80 for the middle level, and then 100 for the Cyber Beast. Now, what's really interesting about these are two things. Number one is that these prices are more expensive than what the market expected. So when Cybertruck pricing released about 2 years ago or whatever it was, whenever the initial prices came out, they were rumored to be a bit cheaper than these. So they got more expensive, and the range was rumored to be higher. So what happened in the launch yesterday is that the range was lower and the price was higher. Now, does that, is that the end of the world? No, because this is one of the most incredibly hard cars to build, right? It's a very difficult product. It's not an easy product to build. So you would expect that it's not going to be perfect and it's not going to be like out of this world. But nonetheless, the product is out and people are excited for it. 2024, you're going to get the high end prices of the car. So the $80,000, $100,000 cars. And then 2025, you'll get the smaller version of the car. What we discussed last night on Finance Junkies was that apparently these are going to be loss leaders for Tesla. And that actually makes sense with what Elon said, saying that, there's going to be 18 months until these cars become cash flow positive. So if that's the case, and it's going to take 18 months just to become cash flow positive, you imagine that the margins they're getting on these cars are not going to be that strong. However, when FSD scales, that's kind of the entire point. It's like they can lose money on these cars. They don't need to make an 18% margin on these cars like they make with the other cars. By the way, Tesla's raising prices in China, which kind of signals that the bottom is in for gross automotive margins if they don't have to keep cutting it and if they have to start raising. Obviously, if rates get cut, then they definitely don't have to keep cutting. So if these are still loss leaders for them, but they're able to monetize with FSD because the car just sells so damn well and they just don't have any sense of a demand problem, then obviously that's going to be very good for Tesla long term. Right, and Tesla is going to, do really well. So, yeah, it is a incredibly exciting moment for Tesla shareholders because this is 4 years in the making for this car to officially be out. Now, the really interesting about this Cybertruck was just the core strength of it. And so this is the video that I want to show, which is what really shocked a lot of people when Elon was introducing the car. This is one of those moments where it was a pretty iconic presentation. The Tesla Cybertruck versus a Porsche 911. So I'll let you guys see this video and then we'll discuss why it's such an incredible thing that they did.
But wait, there's more.
So the Cybertruck beat a Porsche 911 in a race while it was towing a Porsche 911. I mean, I know a lot of you guys have seen that video, but every time I see it, I'm just like, how is that possible? That is absolutely insane. It's insanity. And so, that is another reason I think a lot of people got excited about this car because the sheer strength of it is going to be a very interesting proposition for people that are in the market for trucks. I said this on the live stream a couple of days ago, but we have a friend of the channel, Prakash, who's been very bearish Tesla. He bought into Palantir at $8, so he's been very bullish Palantir. I met him in Vegas, and he was just like, Tesla is just, it's overvalued. It's not that exciting. It's done what it needs to do, and let's move on from it. He saw the Cybertruck a couple of days ago, and he was like, I need to buy some Tesla stock. And that was interesting to me. That someone who could, be so bearish for the far majority of, 7-8 months, basically the entire year, then decides actually this car is going to just be the thing that is the thing. It's kind of like an iPhone moment for Tesla, or maybe an iPad moment. The iPhone was probably the Model 3, right? And so that got a lot of people excited. We will see how the street ultimately reacts to it. Right now, the street is not happy with Tesla at 234. Martin makes a good point here in the chat. He says that the problem is that when you sell the first Cybertruck, the entire cost of the Cybertruck production line gets moved to the income statement. It kills EPS. Yeah, and like that's another reason why I think a lot of analysts were upset when Elon was on the earnings call and they were asking about sort of more specifics about the Cybertruck. He was just like, look, it's going to take a long time. And part of this is because once you sell that first one, you have to factor in the cost that gets into the balance sheet. But I think one thing that's important is that analysts that are really forward looking understand the potential of the Cybertruck and what the necessity of yesterday's event was. It's not like we learned anything that new. It's that you wanted to get people excited about what the future potential of this car would be in trajectory towards all the other competition. In fact, I thought a really, sweet moment on Twitter was when Jim Farley ended up congratulating Elon Musk. For those that don't know who Jim Farley is, he is the CEO of Ford that sells the F-150. It is the best-selling truck of all time, especially in the United States of America. Elon Musk says, massive congrats to the incredible Tesla team from design through manufacturing for making Cybertruck real. I love you. Jim Farley says, congrats, Elon Musk and team. And I think that congrats was kind of a nod to, a fellow competitor who's basically saying, look, we're about to go head to head. This is going to be a ruthless competition, but congrats because you're making us work harder and we appreciate what you're doing. On top of that, I do think it is, it's pretty obvious that Ford vehicles are going to eventually be using some form of Tesla software, definitely going to be using their supercharging networks into the future. So, it's two competitors going at it that are very respectful towards each other. Another thing that's also really important is that Elon Musk at the New York Times interview, 2 days ago, where he told advertisers to go F themselves, he made one interesting point that I didn't know about. He said if you took out Tesla's supercharging network and it was an independent company, it would be a Fortune 500 company in and of itself. I didn't know that. I didn't know this. I didn't know that the supercharging network was that intense and was producing that much potential revenue and had the margins that it was enough to be like its own public company on the NASDAQ or on the stock exchange. Like that was just incredible to me. And so obviously he was talking about this whole concept of Tesla as a mixture of a lot of companies. And I think, again, when you just factor it in, this is why I got really bullish on Tesla. I'm like, in the next 5 years, if every single auto manufacturer on the planet, and pretty much all of them, I think there's a couple of them left, but pretty much all of them have decided to use Tesla supercharging network, that is a lot of money going into Tesla because everyone's going to be charging their cars because everyone's going to be driving an EV. Maybe not in the next 5 years, but definitely in the next 20 years. Like there's not, and then obviously the market's going to price that in, right? There is not, I don't think we're going to have ICE vehicles in the next 25 years. Or I think if we do, we will. It's just going to be so dramatically less than EVs right now. And so, then the question just becomes who's going to be the I guess I hate to use this cliche, but AWS, right? Who's going to be controlling all of the spend that happens in that space? Eeyore says, I couldn't be more bearish on the Cybertruck. If you're driving up a hill, you can't even see in front of you without both engines. It can't drive up a moderate incline. Lots of cool features no one needs. A lot of people, I actually heard this complaint as well. And this is from a lot of the truck community on Twitter that I was hearing talk yesterday. That basically said it wasn't as exciting because it's not like a real truck. I mean, where's a rear wheel drive truck? That was the concern, that it's a rear wheel drive truck, so it's not going to be the most interesting. I don't know that much about trucks. To me, I'm just like, yo, this shit looks cool. I think a lot of people are going to buy it. So I guess there is some bearish concern to be had there, but to me, it looks pretty cool. Arnie, thank you for being in the chat. He says, I keep saying the charging stations are the best asset for Tesla. Yeah, look, that's what really got me to pull the trigger. I mean, I said this in that I never got to go through that Twitter post, so I should probably go through it right now. I should definitely go through it because we got so much news the last couple days. I never got to go through it, but that was really my biggest, like, you guys saw it every time on the market open all throughout September and October when we had a new headline of Volkswagen or whatever, Hyundai, they're all bowing down to Tesla and they're using their charger. I was just like, dude, this is like a big deal to me. I was like, and the way I'm seeing it is just like, this is not slowing down. And it's kind of stupid to bet on these other car companies versus this one when this is happening. So let me pull up that post. But that to me was definitely something interesting to factor in. And I think that's going to be a big part of them at the end of the day. Tesla's non-auto profit is growing like gangbusters. That is also correct. Think of Ford owning 80% of all gas stations. That's also a big deal, right? A lot of that's going to start transitioning to supercharging networks. Erwin says, grew up on a farm in Nebraska and live in Colorado with the snow, etc. Now would never buy a rear wheel drive truck. Yeah, and I think people like you are definitely not going to be excited about that. There's, the Chevys and Fords are going to be more of your line. I guess the question becomes, across the world, is there going to be enough demand to sell the Cybertrucks like hotcakes? And quite frankly, just like as a statement, like, people that have 80 grand that as a statement on the road just want to own that car. I think that's going to give them demand. I think luxury is going to give them demand. I think people that have money that don't really care about trucks, but would like, a 6-seater car, that's going to give them demand. And then there's going to be a portion of the population that really loves the whole like truck and like you can store a lot of shit in it and it can, tow 11,000 pounds. Those people are going to buy. But I think the far majority of people are going to buy Tesla just because it's an exciting car and the Cybertruck is going to be exciting for them to buy. Chris, we got Bear Chris in the chat around Tesla. When Tesla's back below 150, I expect a Chris was right shout out. Dude, you'll get your shout out if we get down to 150. That's a nasty decline. Hold on. That would be, what would that be? That would be a 37.5% decline. If we drop 37% on Tesla, yeah, you're going to get a shout out. I think a lot of people are going to give you a shout out. I don't know if that's happening. I don't know if we're seeing 150 again. 150 to Tesla seems like $8 on Palantir to me. Like I see 190, sure. Could I even see 175? Sure. But 150 is like, I don't know. I feel like we've got to have a really bad macro for that to happen. And maybe that does happen, but we will see. We will see if it does. Still pre-ordered the Cybertruck a while ago, getting the AWI mid-trim model. Yeah. And I think a lot of people, there's 300,000 pre-orders. Vitaly made a good point last night. He said it's probably going to drop in half to 150,000 now that people like actually, or there's more than 300,000 pre-orders. He's number 300,000 on the pre-order list. It's probably going to start dropping more now that people actually have to buy. So demand is not a problem for this car. There is more than enough people in the world that have the money. The question becomes, how quickly can Tesla get them out? So let me get through this post real quick. This is what I posted when I said I bought Tesla like 3 days ago. Probably, we'll see how low it goes today. My goal is to get to 50 shares. I'm at 5 shares. So slowly we'll just DCA into it. And we'll do that live every time I buy. So to clarify, I have always been bullish on Tesla. I know a lot of people think I was a bear. I bought at 170 before every split in May 2019. I remember on Robinhood, it was one of the first couple stocks I was buying. I was excited about it. But then I had a friend who was like, well, if it's at 350, you bought at 170, you're almost up double. You should just sell it. And I had no idea about investing. So I just sold it, right? I was dumb. I was like, all right, whatever. I was in college. And since then, I never got a chance to really get back in the company. Didn't have dry capital. All this stuff happened. Valuation is closer to end of 2020 levels, even though revenue has gone from 30 billion to 100 billion. I think the company obviously has significantly increased. And Jan 2023, I know it was at 100. I didn't buy. A lot of my buys were going to $7 and $8 at Palantir. So I just decided to buy a Palantir because obviously I think of Palantir deeply more than Tesla. But now here's my sort of core thesis on Tesla. Inflation seems dead. I could be wrong on that, but it seems dead. Rates are not going to go up again. I don't think we're tightening again. And the Fed will have to think of cutting once we see the low 2 handle on CPI, shelter, oil. We're going to see that low 2 handle on CPI, hopefully by January, February, if not in December. 8 trillion in global money market funds. I think they're going to come in before we get into that rate cut cycle. When that rate cycle does happen, the money's going to start to move. When that money starts to move, there's going to be anticipation of that rate cut. And some of that money is going to go to equities. And some of those equities are going to benefit like a company like Tesla. And then here's sort of the core other things. Looks like margins have hit a bottom, especially if they're increasing prices in China. If rates get cut, there's no need to lower prices because there are going to be no more rate cuts. This is another big thing to me. India is warming up to Tesla. I think just on a qualitative level, a lot of other countries are going to be like, you know what? We want Tesla manufacturing. We want Tesla cars. We want to, give them less import fees so we can have more jobs. And if EVs are the future, why the hell will we not have the biggest EV company in the world, the most technologically advanced EV company in the world in our country? And I think Tesla's going to be able to have a lot of international expansion and warm international expansion because these the countries are going to be nicer to Tesla. And then every automaker is choosing the charging standard Tesla set. This was big for me. I was just mind blown seeing every single one of these companies bow down to Tesla because they simply had no choice because of Tesla's moat. Cybertruck, a $25,000 car, eventually will make a Honda Civic look like a toy. This is a little bit more of a stretch to me, even though I know the 25K car is happening. But when it does happen, who's going to buy a Honda Civic or a Toyota Corolla? That's just not going to happen, right? We're going to make sure that, people are going to buy a Tesla $25,000 car. They're like, no one in their right mind is buying a Toyota Corolla or a Honda Civic when you can buy a Tesla for 25,000. That's probably 6 years down the line, but I think that is what's going to get the market very excited as well, and be bullish for them once we see progress on that. Then XAI could be integrated and trained on 500 million tweets a day. That can make the bot more excited. Tesla could get an equity stake in XAI. It also involves Dojo and how they're ramping up more compute. So that to me is a little bit more of a stretch, but that's part of the sort of thesis. FSD is going to happen. I've accepted it's going to happen. I don't want to drive in a self-driving car. I would not let my kid be in a self-driving car if I had a baby, but a lot of people do. And so in my opinion, my thesis on FSD was like, I'm not bullish on it, but a lot of people are, and Tesla's going to print money off of it. So why the fuck does it matter? Let's just, it's going to happen. It's just when it's going to happen, it's going to happen. And then finally, last point of the thesis is just, I don't want to bet against Elon Musk. And when I saw Elon say, go F yourselves on the New York Times conference, I talked about it in depth yesterday for 45 minutes. That reaffirmed my necessity to feel like, you know what? I was really happy I bought some Tesla a couple of days ago. Because sometimes you just want to support a company and support a mission. And yes, I'm looking for the return, but it's like, dude, like I want to support in whatever way I can. And my 5 shares are not going to do anything, but it makes me feel a little happier that these are the companies that I own. And when someone is willing to say, go F yourselves to the biggest corporate advertisers in the world, what do you think he's willing to do for his company? And it's like, it's so silly I even say this, because we know the story of Tesla. We know him sleeping in the basement. We know him sleeping at the factory. Like, this guy's just like, he literally went bankrupt in 2008 or was on the brink of it right before he was able to raise money during the great financial crisis. So we've known he's given his heart and soul to Tesla. But then him saying F you to the advertisers, which is not necessarily the best for Tesla, right? Because Twitter needs to survive, and standing up for his principles, to me, it just made me feel more excited to be a Tesla shareholder. So I want to own some Tesla stock. That's it. Not a big part of the portfolio at this point. I want to get it to around 10%, which I think would be reasonable. But I think for the long-term hold, a lot of my portfolio has been options. A solid long-term hold to me is Tesla. Another one is Palantir. And then another one is Robinhood, which probably doesn't deserve to be in the same line of Tesla and Palantir. But that's where my due diligence head comes out, and I'm like, Robinhood's a good one to own as well. So that's kind of the bull thesis of how I've decided to rationalize Tesla as well. Inbound says 150 on Tesla would be a $450 billion market cap. It's fair, but is it though? Yeah, I mean, 150 at $450 billion. Obviously, Gordon Johnson would think that's also incredibly overvalued, but the market's giving it a $763 billion market cap because there is a little bit of a premium on the future growth that could happen. There's not that many companies in the world that are growing at 45% year over year. There's just not. And a lot of those companies that are like a Snowflake, I wouldn't pick them over a Tesla. They're just not that exciting. A Palantir I would, because Palantir I think has a moat. It's very exciting. They can be a next big tech company one day. But when it comes to a lot of these SaaS players versus a Tesla long-term hold, it's just like it's very obvious what Tesla is going to be in the future. You were on fire until you said Robinhood. Bay Ray is acting like he doesn't have Robinhood call options that are printing, baby. Where's Robinhood right now? Let's transition to the macro. Let's get into that. So Cybertruck is out. Robinhood up 0.74% in the pre-markets. That's the coverage on Tesla. Cybertruck is going to be awesome. Excited for when it comes out. And I will not be buying one because at this point I cannot afford a Cybertruck. And even if I could, quite frankly, I wouldn't spend it on a car. That's just me. Like I never cared about cars. I'm going to drive my Honda Civic for a long time. Like when I have enough money, I'll probably buy a Tesla just because I'll have enough money to do it. But like, I don't give a shit about cars, bro. Like I love my Honda Civic. It's a simple car. And so I've just never cared about cars. That's another reason I'm never into Tesla, bro. I just don't care about cars that much. Like I've never really cared about cars. Like I was not one of those kids growing up that was like excited to see a Lambo or play with cars. I didn't give a shit. So that also took me a while to like really develop a lot of love for Tesla. But obviously you get into the story and it's just, so exciting. And so that's what we've got right there. So, I don't even own a car. No need. Oh, wow. And Martin, you have 4,000 Tesla shares and you don't even own a car. That's cool. That's actually great. More money goes into Tesla. All right. So let's move on to macro. ADJ says, Amit, you've gotten really good at this market open. Congratulations on making a true format and show, brother. Thank you, ADJ. I appreciate it a lot. I think the show changed, honestly, when we started 40 minutes earlier. Like when we started at 8:45 versus at 9:20, and we actually had time to develop a show and get through topics and all that stuff. I think that's when, the show became a lot more fun because we have a lot of topics to discuss. And then you kind of get into your zone. Like yesterday, And let me pull up the 10-year right now as we transition to macro. Yesterday, I couldn't explain how excited I was to get out of bed and do the market open, because when you've got a lot of news to discuss and you're in this business, which is the business of content creation, you're just like, you start to get into your zone. Dude, yesterday I felt like I was a rapper in a studio, and I didn't write down any lyrics, because I looked back at it. I was just like looking back on the open yesterday. I was like, did I really go 45 minutes talking about this Elon Musk go F yourself comment? I was like, I don't know how I went 45 minutes. Like, the ideas just kept coming, and I just kept spitting them, and we kept going through all of it. But that's the fun of like being in that zone. And I think like forcing myself to do the market open every single day and starting earlier, it like really gets you into that zone. And it's fun when you get into it, because it's just like an exciting level to be at. So it's been super fun journey. And we'll have Dan Ives today to keep talking more about everything going on in the markets. All right, let's transition to 10 years. So 10 years up a little bit. That's why the pre-markets are down. 4.34 on the 10-year. Well, it's down a little bit, but it's up from yesterday at 4.284. This 10-year, I think, is going to be really interesting to watch towards the end of the year and see how badly it is able to get, or how strong it's able to maintain. Google nasty in the pre-market, 133. I didn't even see. Wow, Google's at 139 yesterday. So Google collapsed yesterday. Amazon at 146. Amazon's all right. PayPal's up a little bit in the pre-markets. Tesla down at 233. Robinhood up a little bit. Robinhood hit 930 yesterday, came back down to 884. Right now, GameStop is also down at 1445. S&P, I think, is starting to chill a little bit. And the reason the S&P is chilling is because it's had a great week. It's up a little bit in the pre-market, 456, not beating those 52-week highs on 459. We had Tom Lee yesterday discuss what he thinks is happening on the markets and why he thinks things are going to keep going higher, for why we're going to get a end of year rally. So although the rally has cooled off just a little bit in the past week, even though this month has been phenomenal for the S&P 500, Tom Lee thinks we're not going to see a cooling off towards the end of the year. He thinks December is going to keep getting better and better and better. So let's take a look from him, what he has to say, and then we'll get into some other news.
Advisors, head of research Tom Lee is with us at Post 9. Great to see you, T. Welcome back. Great to see you. Your line lately has been zigzag, at least for the going into year end, right?
Yes.
Meaning what?
Well, I think that as Sarah was discussing, the market's hyper-focused, especially interest rates, on inflation versus growth data. I think it's going to be kind of conflicting. Today was a good inflation print. Next week could be strong jobs because of the UAW rehires. And then we don't know what November CPI looks like. So I think the market will sort of zig and zag until the FOMC. And that's when I think we see there's so much breathing room to make a dovish pivot. I mean, inflation's dramatically undershooting, and higher for longer isn't really what Fed talk is anymore. So I think we get a dovish a dovish conversation, and that fuels the year-end rally.
So you're a buyer on any dips, is basically what you've been saying.
Yes.
And you got a great catalog of what you call granny shots, which are no-brainer, basically, decisions. Is that list changing and evolving somehow, broadly?
Yeah, we rebalance every quarter, but we also do something every month called Super Grannies, where we do a webinar with our clients and highlight it. Last month's CRM, Salesforce, was actually one of our Super Grannies, and it's obviously having a good day today.
Yes.
Yeah. But year to date, it's up over 25%. Each of the last 5 years, it's beaten the market by almost 400 basis points. So,
do you expect the chop to get tougher after the new year?
I think December tells us what 2024 kind of looks like. So I think if it's choppy this month, next year is going to be a tough year for investors because they're going to get whipsawed. But, for the path of the markets, we're going to publish our outlook on December 7th.
I was just going to say, wait, is Tom Lee not bullish? What's happening?
You'll have to find out.
I'm going to take a guess. You're going to stay bullish.
Well, there's only two options, right? It's A or B.
Yes, that's true.
When was the last time you were bearish?
Well, first half of 2022, we said be treacherous. So we were bearish there. In August, we said the markets were going to be tough this year. And so for the next 2 months, markets were tough. So generally, it's been a rising market, but you got to be a little tactical. And I would say, in retrospect, people have been holding on to a bearish view too long. In fact, I think they've anchored to a bearish view that's been expensive this year to have a bearish view. I mean, give you an example. Market's up 20% this year. Retail equity flows to the stock market are negative 240 billion. It's never happened. How would people?
What explains that then?
That's interesting. I didn't know that. Retail equity flows are negative 240 billion. That's from people like you and I. So we took out money in the market, but the market's up. So let's hear why he thinks that's the case.
Well, it shows you that stocks recalibrate off interest rates and on expected monetary policy, but flows generally is a tailwind. It was a huge headwind this year. Well, when things align, what can markets do? It can be really powerful. I think this is a year where it just showed most people got it wrong.
Do you think that when it comes time for rate cuts, whenever we get there, that it is a sign of impending danger? Or can it be a more gradual, benign cut cycle, the way Waller kind of laid out earlier in the week?
I think Waller's view will prevail if inflation was transitory. And I think that's what it's increasingly looking like, because we're seeing a huge deceleration of core inflation. If you took out nursing services this month, core was printing 0.07. It would almost round to zero on core. Nothing's happening to drive this down. It's just that goods, which was hitting services like insurance premiums, that's all starting to disappear. And now we're getting back towards 2%.
The only cautionary note I'm getting lately is that holiday spend on a credit card spend basis, given that core goods are basically flat, is pretty solid. And that you couple that with whatever Chicago PMI is telling us and whatever OPEC's doing, that you might get a little bounce. No?
Yeah, you could. And also, there is bonuses paid for UAW workers coming back. So you might get a December sort of spending lift, but I think it's all a head fake. And I think ultimately, I don't think inflation expectations are rising, and I don't think wages demands are growing. And I mean, to get to a wage inflation spiral or an inflation spiral, you need something de-anchored, and it's pretty well anchored.
Interesting thoughts by not Dan Ives, Tom Lee. Dan Ives will have him on a separate stream, 11:15 today. So for those that can join that would be awesome. 11:15, we will be live with Dan Ives. It was interesting what Tom Lee's talking about there, which is that there is a certain level that the market is trying to get to, or that the market had to get to, in terms of recalibrating. And the sort of foundational reason for why that happened is because everyone was so bearish. And it's really interesting, right? Going into 2023, everyone was so damn bearish on the market, what was going to happen, where stocks were going. And things started changing as ChatGPT came out in March, and you started seeing all these catalysts for things to happen. Remember the two catalysts that happened towards the middle of the year. AI became a thing with ChatGPT, it just obviously became a thing, and then the market got excited, even if the AI revenues are not there yet, but they probably will be in the next couple of years. And so the market's forward-looking, right? So they're pricing in that growth. And then on top of that, you had inflation come down. Now inflation's at 3.2. We get down to 2.9. We're getting that 2 handle, and then we start going lower and lower, even though it is harder to get lower and lower as we progress in the future. So inflation coming down and everyone being bearish while AI gave a catalyst of growth to the market, it was the perfect recipe for this market to be exciting and for this market to really enjoy momentum that I don't think we've seen ever since 2021. And even in 2021, if you remember, February was I know November was technically the top of 2021, but February is when things started to fall. ARK topped out at 160. Palantir topped out at 45. I think Tesla was at 441 at the time, something like that. So February 2021 was when we start to saw Roku was at 300, right? Stuff started that was the GameStop AMC scenario, and things just kept coming down from there. So if you started buying at the top of 2021, you started holding a bag, and then things kind of came back in November 2021. That's when Nvidia went up $800 or something pre-split. It was at a higher level, and then that came crashing down as well. So 2022 was a disaster. And then 2023, you kind of needed a lot of those catalysts to be in place, and they ended up being in place. Oh, I forgot bank failures. Yeah, that was another thing. That was a huge... 2023 was so crazy. Now we're in December that we even... I even forgot that there was a huge bank failure, Silicon Valley Bank, that allowed First Republic and Credit Suisse to also fall over. So, I mean... Look, at the end of the day, I think the market rally that needed to happen in 2023 had the ingredients. The problem, or at least the existential question for all of us as investors, is what are the ingredients shaping up for 2024 that are going to allow the same type of a rally to continue? Remember, I mean, the market's up 20% this year. I don't know how excited we can be for the market to be up another, 20% next year or something, right? It's going to be complicated to do a 20% year again, unless AI actually is that catalyst of growth that is really becoming that catalyst of growth that none of us even understand. So, even if we have a flattish year or a 5-6% year, I think that'll still be really good because of the year we had right now. But Tom Lee ought to be bullish on what on top of that, we'll talk about Bitcoin in a second, but he also feels Bitcoin is going to have all-time highs in 2024, and that, or at least Bitcoin is going to make a lot of room in 24 for moving because of the halving event, spot ETFs, and a lot of other catalysts there. That could also put in a risk-on environment to have a real bullish 2024. And then we can worry about 2025 if there's ever going to be a crash. Let's take a look at this clip I wanted to discuss. Google, company I'm bullish on. Here's a guy who absolutely thinks Google is going down the drain. Market is not that excited for Google over the past couple of weeks. Here's why Google is dead, according to Brad Gerstner.
Debated, but I was bullish Alphabet for the second half of this year, and you were bearish. I heard you on a podcast the other day. It sounds like you haven't changed your tune on Alphabet. What is your big concern? If you like when you talk to shareholders in Alphabet now, is it that they don't have the lead position in AI and that all of a sudden search is going to get away from them, or is there something else? Because that likelihood seems really slim to me.
Okay, so Josh, here's my fundamental position. Search is going to be replaced by agent-led information discovery. I see it every day. My 15-year-old son says, Dad, I don't use Google anymore. I just use ChatGPT. I talked to 2,000 people at the Javits Center. How many people have used ChatGPT instead of Google over the course of the last 2 days? 1,000 hands in the room go up. I asked my analysts who are sitting on their desk. They're replacing their use of Google with ChatGPT. We are having a fundamental structural shift in how people retrieve and discover answers to the questions they have. So Google is going to have to compete in this new thing, okay? Meta's going to compete, Apple's going to compete, Microsoft with Copilot, ChatGPT, etc. There are going to be 6, 7, 8 incredible competitors there. Google will be one of those competitors. And let's assume that they're a very competent competitor because they have all of these assets. The question to you, what do you think the likelihood is that they're going to reconstruct is dominant of monopoly in this new thing as they have in search? So facing innovators' dilemma, facing the cultural challenges they have, I would just say as an investor, Josh, and I have a ton of respect for you, the discount rate that you need to apply to this investment is much, much higher today than it was 2 years ago. 2 years ago, there was no challenger. Google was the only game in town. Now we know search is being replaced with a new form of information discovery. And all I'm saying is even if they emerge as the leader in this thing, they will not have as much share of the pool of profits as they have in search. It's almost impossible for me to see how they replicate that. Now, I also have concerns about how they're operating the business, how they're slow in releasing products, the cultural challenges they have. I think they have challenges around the TPU versus the GPUs of NVIDIA. But I will stipulate that they get all of that fixed. I still don't think they can replicate the monopoly.
So I think the area where Google still maintains the advantage is they have all of the information, they have all the data, they have all of the users, and there is a universe in which they don't have 95% of the market like they do in search. They keep some very large part of the market, but it's actually more profitable, the new era. The main difference between search and these large language models, from what I can see, search is Google tells you where to go find the answer. The large language model just gives you the answer. I think Google wants to be in that business. I don't think they need to own 95% of it in order to be highly, highly profitable, especially when combined with their franchises like Gmail, like YouTube. These are assets that will greatly benefit from this new world that you described. And these are one-of-a-kind assets that only Google has.
And so on the one hand, one could make it, people have asked me, are you short Google? The answer is no, we're not short Google. In fact, we owned Google for part of this year. The question for you, Josh, is, are they, where is the highest and best use of your dollar? And all I'm saying is that the loss of that search position, every dollar of search is almost 100% margin. Okay, in that business. And listen, Ruth is an incredible CFO, now president over there. There's tons of costs to be cut there. They have tons of assets. All of that is true. And by the way, Silicon Valley is healthier when we have a healthy Google. Okay, I hope that Google.
Yeah, the one thing Brad's missing that he doesn't understand, and I think we've talked about it a lot, is their buybacks, right? So from a pure stock perspective, Google is going to buy back so many shares that EPS is going to go through the roof. and Google stock will go up. I think the thesis on search being disrupted is correct. LLMs being a new form of compute and user interaction, a paradigm of how we engage with information, is correct. The problem is, I agree with Josh's point, which is that Gmail, YouTube, Google Sheets, Google whatever other products that they have, all of those are going to be enhanced via LLMs and generative AI. Even I'm using Google, I'm getting generative AI answers, so I don't have to use that. I don't have to use ChatGPT because I get the answer on Google. And eventually Google will figure out how to make that profitable. So even if Google doesn't have 95% of the search market, if they have 85%, but the generative AI search becomes more profitable for them or more meaningful for them, or their existing ecosystem of products gets more enhanced because of their ability to essentially integrate AI and large language models into something like a YouTube or a Gmail, which makes YouTube search better, or Gmail searching for your email is better, or auto compose better, all those types of products, Google is going to be fine. It's really not going to be the worst thing in the world. Remember, Bing gets 1 billion visits a month. Google gets 88 billion. I mean, I think I get Brad talked to a couple thousand people at a conference, and he said, how many people use ChatGPT? And all of them raised their hand. He has to remember the conference he was at was a tech conference. All of those people in that room are on the cutting edge of tech. All of those people will try out a new product. My mom has never used ChatGPT once. Maybe she's put up the web. She doesn't give a shit about ChatGPT, dude. She doesn't care, right? My dad doesn't care. And my mom and my dad are the billions of people that exist on the planet. Eventually, one day they might care. But the reason Google has such a monopoly is because it's information to everything, and all you have to do is search something and you get the answer. So for those people, I don't think they need some amazing LLM response. And even if Google gives them an LLM response, they're not going to need to get a better LLM response from like a Claude or an Amazon or a Llama competitor, right? I think Brad's wrong about this. And then in terms of the stock, when he's saying what's the best use of your dollar, I don't think the best use of your dollar is at Microsoft at all-time highs versus Google. Because yes, can Microsoft keep going higher? Correct. Does Microsoft have a better moat than Google? I honestly think yes. But Google's got buybacks up the wazoo that they're going to be issuing on that stock. And that stock's depressed from its all-time high, whereas Microsoft's making new all-time highs. So I think Google's going to be fine there. I don't think there's going to be a horrible thesis. Maybe in a couple years, if search really does die, and we'll see it coming. Search advertising, by the way, was up 11% year over year in the last quarter, $44 billion off these little clicks that people do. I mean, that's not going away yet. Maybe later, but not yet. Peter Girardi says, users that don't want to be so exposed to social engineering from a far left perspective, I'm going to choose to not use Google AI. I've done extensive research side by side with ChatGPT. Yeah, I think some people are also going to use Grok. Elon's. I mean, I'm paying $22 a month for Twitter now. I will cancel ChatGPT and use Elon's Grok, because if I'm paying, that sounded too sexual, but if I'm paying $20 to Twitter and I get a large language model better than ChatGPT or similar, I'll just use that. Why would I pay $40 a month for ChatGPT and Grok if I get access to Grok? So let's see what Elon comes out with as well, because he wants to play a role in this. And then I think, people will have their choice. But the point is, the far majority of people, I don't think, care that much. And as a result of that, Google's just going to end up winning, or at least keeping their market share more than they have before. So I don't know. I don't think he's necessarily correct on Google. The Google one is hard. Chris mentions they've got Google Cloud, obviously YouTube TV, YouTube Music. There's a lot of stuff in Google. Chris has done a lot of due diligence on this that is probably not going away. Isn't it funny? Altimeter missed Palantir. Yeah, Altimeter is also holding Snowflake and screaming about how great Snowflake is. And some people say his averages are around the $300 range on Snowflake. I don't think he's profitable on Snowflake. There's no way. He was buying the shit out of that in 2021, 2022. So there's no way he's break even on Snowflake. But every day he goes on CNBC or whenever they have him on and he talks about how great Snowflake is. Dude, you can keep saying how great Snowflake is, but he is holding a lot of Snowflake at a higher price. So he missed out on Palantir because he was excited about Snowflake because he wanted growth. And it's like, I know how people are obsessed with growth, and growth is great, but at some level you have to look at, does the product have a moat? And I don't know if Snowflake necessarily has that. But nonetheless, bearish on Google and bearish on Palantir. We'll see in the next couple of years. Maybe that's the right bet, or maybe that's the wrong bet, because his big bets are on Snowflake and Microsoft and NVIDIA. And look, he's probably not going to go wrong on those. You're probably going to make a lot of money with those three, but I don't think Google and Palantir are going to make investors lose a lot of money. But we'll see what happens. Folks, it is December 1st, 2023. We are back. It is 9:30 a.m., first day of December. Thank you, 683 people, for being here. It means the absolute world to me. The stock market, once again, for another day, is open. Wake your ass up. Here we go. It's time to get back into it. The stock market is open, and let's start off with Palantir. 1977 down 1.4% on the day. So we got Palantir that's down just a little bit, 1% on the day. 1984. It was at 20 in the pre-market. So we did see some sell side pressure come down to Palantir. Microsoft 377, it's down. CRM is up yesterday it's up from its earnings yesterday at 250, but it's down a little bit today, 0.68. Makes sense. Kind of probably fall a little bit after you're up 8 cents or 8% on the day. Enphase 99.85 down below 100. So below that price level that we saw it at 101 yesterday, it peaked. Affirm at $34, still up 85% for the month. Absolutely incredible. NVIDIA, wow, 466 on NVIDIA. Didn't see this one coming. 466 on NVIDIA. So we got NVIDIA coming down, folks. NVIDIA's down from 504, I think, at the top. So we got NVIDIA coming down a little bit. Amazon at 146, Google 133. Again, Google's down. Meta 326. That's nasty. So Meta was at 342 3 days ago at their 52-week high. Meta is now down. So that 52-week high was not lasting for long. Meta now falling down a little bit. And look, it makes sense. Big tech needs to relax a little bit. I mean, big tech has to relax a little bit because it just got really high for them. Robinhood is up 889, up 1% of the day. Not bad for Robinhood. S&P 500 basically flat, 455 down 0.17%. Teladoc $18. It's up nicely for the week, but it is flat today. SoFi 722. SoFi is not getting as much love as it got in the beginning of the week. It was at 760. Now it's 722. So fintech cooling off a little bit. Square continuing to do well, 63.93. Square was at 39 3 weeks ago. So if you've got in at 39, you're riding it up. Square is doing very, very well. GameStop, 1471. Coinbase up 2% today at 126. Coinbase cooled off yesterday from 131. Again, Coinbase just a phenomenal end of year because this bad boy is at 52-week highs. And I'm talking, of course, about BTC. The unmovable money, the money that is, the immutable money, not unmovable. You can move it, when you're like selling drugs, you can move it. But the immutable money, Bitcoin, 38,323 was at 38,600. So it was 38,859 today was the high. It was very close to that 39,000 level. And then when it crosses 40,000, people get really excited. Okay, Palantir is dropping like a stone, down 2%. Friday scaries are taking into effect, folks. People are scared on a Friday after a good week, and they're taking some profits. By the way, you guys are going to be very happy for what I'm about to tell you. I took some profits on Bitfarm. I sold my Bitfarm position yesterday. Made $600, baby. $600 went into my pocket. I took that 600 and you know how responsible I was? I threw it. I just threw it like a baseball. I just threw it into my Roth IRA, and I got another 3% on top of that. So I got $18 on top of the $600 that I made, 46% in 2 days. I'm bragging right now, like this is such a big deal. But yeah, it was a little stupid degenerate gamble on Bitfarms, and look, it went up. So I took the money and I put it in. The reason I sold, honestly, is because I just felt like it ran up a lot, and I feel like crypto is going to cool down a little bit, because if you looked at Coinbase yesterday, Coinbase also fell, and I was just like, I feel like it's going to just chill for a little bit, and I don't think I'm going to get 46% on my money in 2 days that quickly. So, Bitcoin, yeah, I know it got to a new high today, but I don't know how long that's going to last, just given it's had a great year, right? And things could start to fall back down. So took the money and run and kept going. Jonathan says, every morning I don't work, I'm here. Thanks, Amit, for being my morning news and finance channel. Jonathan, thank you so much for being here, man. It means the world to me that you take some time out of your day, especially when you've got your free time and you're relaxing when you don't work. So I appreciate you, man. Thank you so much for being here. It means the world to me. Chris says, Cybertruck is so ugly. Am I the only one that thinks this? I thought this like a month ago, and then I started watching more videos, and I'm like, it's still kind of ugly. I'm not going to lie. It's like that girl, right? You try to put on some glasses and you're like, maybe if I turn her to the side, she's like, no, it's still kind of ugly, but it's one of those uglies that the personality of it is what gets you attracted, right? It's like you can deal with an ugly as long as the personality is there. It is what it is. So that's what you got to deal with. So I think the personality of the Cybertruck is like really exciting. And when you look at it in a weird way, like it's wow. I was trying to find Tesla. I typed in Elon in the search bar. That's crazy. I'm trying to find Tesla. it's one of those things where it's like, dude, it's a really exciting vehicle. And when you see it on the road, even if it looks ugly, it's like, dude, it stands out, right? It's not a Lamborghini that stands out on the road. It's like what is that? And it makes a statement. So I think that's why, it's still exciting at the end of the day. So I like it. And I think a lot of people disagree with the whole thing that it looks ugly. A lot of people are just like, dude, it looks super clean. It's sleek. It looks like it hurts. It looks like if you touch it, like you're going to get stabbed or something. Like, it looks so pointy. But I can't wait to see it in person because the people that I've talked to that have seen it in person are just so excited about it. Amit bought back into Bitfarms and his Roth, guys. Don't be impressed. Let's see what those calls are at right now. Let's see. Just for shits and giggles. So let's see. So the Bitfarm 2026, it's probably going to be up since I sold it yesterday. 2026, 1.5. Oh, no, it's down, baby. It's down. Let's go. Not bad. It's down. So I sold at the right time until it runs up again. So far, I'm good. I'm even. Robinhood calls are doing really well. Let me show you guys these. These guys are up nicely 44% right now. These are the 1220 debit call strikes, 44%, $2,500 we're up on those. I think, again, it's still $8.90 on Robinhood. It's still cheap. Let's let Robinhood keep playing out a little bit, and we'll keep it going from there. And then here's the truest calls I have. These are the new ones I have. These are 2026. So I got out of the 2025s. These are 2026. These are up 17%. And these are $32, $32.5, $45 strikes. And I told you guys I was doing that. I got out of the 2025s and went into 2026 because I was getting scared about 2024. So that's what we've got there. Amit, how's your new Tesla position doing? Let's actually check on that. Let's check on that beautiful Tesla position. The Tesla position that I purchased of 5 shares is now down $4.50. So we are down on the Tesla position. Dude, I should have sold it at $250. I should have known after the event. It was, but I was trying to be this whole long-term investor thing that you guys keep talking about. I was like, no, let me just blah, blah, blah. Of course, it was going to come back down. So yeah, that's back down, and we'll keep DCA into it, but let's let it potentially fall a little bit more. I mean, the market's not excited. The market did not like the Cybertruck, bro. The market didn't give a shit about it. The market was like, it's not going to be profitable. We don't know when it's coming. Like, it's kind of expensive. So until you get it, we're not going to give you any excitement. But when they do start selling, I think people will get excited for it and the market will be ready for it. Let's get into some more macro stuff. So we just talked about Google. Obviously, Google, it was a big topic of discussion with Brad Altimeter. He's more bullish on Microsoft and NVIDIA. I want to take a look at, actually, let me do this first before we go into some macro. So we have some big news from Apple. Now, this is still a rumor, but this is not official, but it kind of points to why Warren Buffett still owns his Paramount stake. Maybe Buffett knew about this before all of us. Apple and Paramount are thinking of bundling their streaming services for one price versus competing with each other. I thought this was this was a Wall Street Journal piece that broke this morning, and I thought this was really interesting. And the reason I thought it was interesting is because Paramount actually does have a lot of good content. Paramount is from CBS Viacom. It's not content that I would watch, but like it is content. I think they have like 60 million subscribers, so they definitely have a big audience that is excited for them. Apple obviously is Apple. You imagine Apple and Paramount combining together their services so they don't have to compete with each other. And then you're looking at the churn rate of streaming services. Industry averages around 5%. Apple is at 7%, and Paramount is very close to 7%. You see them both coming together. Kind of makes sense that, hey, we're not Netflix. We don't have the best content in the world. What if we just put it together, we share the revenue, and we kind of go up against the bigger guys in the space? Apple probably would never buy Paramount Plus. That would be way too much. I mean, they would have to buy CBS Viacom. That would just be a way too big acquisition, and I don't think Apple wants to deal with all that media. But bundling their services, kind of like what Spotify and Hulu did back in like 2019, you could get both of them for like $5 a month, which was an insane deal for college kids at the time. But they get you hooked onto those services for a long time, right? I think that is something similar to what they're trying to think of doing here. Apple hasn't come out with anything cool since Johnny Ive left. Yeah, and I think their morning show with the guy from The Office, I'm forgetting his name. You guys are going to kill me for forgetting his name. But the Jennifer Aniston, the Friends lady. And then what's the guy from The Office? Is it like Steve Miller or something? Dude, you guys are going to kill me for getting his name wrong. What's the dude from The Office? What's that guy's name? The Office cast. That guy. He was on the show. Oh, Steve Carell. That guy. Michael Scott. Yes, the Steve Carell guy. That show also didn't do as well as, they thought it was going to do. So as a result of that, Apple has had some issues, and I think this is a good idea. And I think what this speaks to in the streaming space is we're going to see more consolidation. Like, I don't know if these big companies like Peacock are going to be able to survive and not have to license their content to players like Netflix. Because at the end of the day, if Netflix keeps growing and Peacock doesn't, like Friends, The Office, all that stuff, it should go back to Netflix, and Netflix should really get even more dominant, but at least these guys will get some licensing revenue versus having to compete for these individual subscribers, because I think we're going to have a lot of subscription fatigue going to 2024 as well. Like, I don't want to pay for any more subscriptions. I pay for enough of them. And I think a lot of people will see, we'll see a lot of pain as well from a lot of people feeling like that as well. Steve Carell. Yeah, I got it. Steve Carell. Thank you, Michelle. Steve Carell. Thank you, Mario. Steve Carell. Amit, stop speaking. Dude, all right, I'm going to say this, and, I might lose a couple of you for this, but The Office is not that good of a show. It's just not. I saw a couple episodes. Dude, the stupid, dry humor that they do, I literally am just like, why am I watching this when I watch this show? I just can't. I can't do it. I can't do it. That's it. I don't care. I can't do it. It's not exciting for me. It's not exciting for me. I just can't do it. And I know a lot of people are so excited, like, that show is like, they like, that show is everything to them. I don't know how you guys watch that show. I don't know how you guys watch that show, bro. Dawson's Creek is better than The Office. I don't care. Like I don't like when they pan in on someone and then they just have this like 20-second awkward pause and you're just staring at them. That's not funny. Like there's no humor there. It's just wasting my time. Okay. And so, I had a girlfriend back in 2018, and I remember I came over and she was watching the season finale of The Office, and I was watching it with her, and she was crying, bro. Like just tears out of it. Like, she's like legitimately, like, she cannot stop herself. And I'm just looking at her like, you're crying over The Office? Like what? The Office? Like, really? That's what's making you cry? It wasn't it. Someone agrees. Luke agrees. Terry agrees. I feel the same. It's corny. You'll understand when you're older. Dude, I don't know if you can use age here. I don't know if you can use age. This explains why Amit thinks his jokes are funny. Honestly, okay, I'm not going to say what I was going to say. I'm not going to say it. You guys are going to get mad. I'm not going to say it. But I'm just not into The Office. Not into The Office. Did you say Dawson's Creek is better than The Office? Yes, Dawson's Creek is better than The Office. It's just that simple. Dawson's Creek, for those that haven't watched it, is better than The Office. It's not that complicated. Dawson's Creek is a teenage romance extraordinaire. And the coming of age story is just beautiful. The Office is like Jim and Pam. Really? That's what you guys are staking everything on? Jim and Pam? Like it's a paper printing company or whatever? Like, no, it's not interesting. It's not interesting. Not interesting to me at all. Not interesting. Paul said I'm taking my membership away for that. All right, let's get back into the macro. Here is why the rally is going to continue. Actually, do we want to do that one? Or do we want to do... Let's do this one. We're having a debate about tech versus value. Let's actually listen to Brad again. Here's his take for why tech is going to win in 2024 again against value. A lot of people think tech has done so well. Here's a good comparison for why value is not going to continue to do well against tech. So if you're a tech investor, this one will be important to take a listen to.
One of the central questions, obviously, is what's tech going to do? Is it going to have the kind of year that it had this past year? It was one of the topics I asked famed value investor John Rogers of Ariel yesterday at CNBC's CFO Council down in D.C. Here's what he told me.
Well, I think the top of growth stocks is coming again. I really, really do. You saw the Journal had a story today. The Russell 3000 is up roughly 34%, and the Russell 3000 value is only up 2%. It's one of the largest gaps in the history of, the recorded history, I guess, of looking at those indexes. So that gives me a lot of confidence that small value is going to be the place to be, and that growth stocks are going to have a very difficult time as we go into next year.
That's a pretty good segue to Brad Gerstner, huh? He's our halftime headliner today, joins us exclusively, the Altimeter Capital founder and CEO. Welcome back. It's good to see you.
I mean, it's great to be here. This is so spicy already. I have a piece of advice for Nelson Peltz.
Go ahead.
Okay, he should call Elon Musk and nominate him to that proxy board of 3 people. We want to spice up and do something bold at Disney. Let's get GFY himself on the board.
The problem is, I think Musk has already told Iger where to go. And he did that last night with Andrew, of course, which I know you're alluding to, but we're not going to play it right now. Nonetheless.
So let's talk about John Rogers.
Yeah, let's talk about that. Let's talk about that. You must have a lot. I mean, I know you have respect for opposing views and investors as seasoned as he.
Yes. No, I have a lot of respect for John Rogers, but on this issue, he's dead wrong. And let me tell you why he's wrong. If you look at the last 10 years, Scott, tech has compounded at about 16%. Non-tech has compounded at about 6%. Now, you might say, why is that? Well, the reason is because tech earnings have compounded in the mid-teens and non-tech earnings have compounded at about 5%. Although we had a big step up in 2023, it was really just a reversion to the mean from the big step down, the compression we had in 2022 caused by this parabolic increase in rates. We're just back on the trend line in terms of tech's relative growth to non-tech. And so, of course, we don't have the asymmetric setup that we had at the start of 2023. But I think that tech is going to continue to outperform non-tech in 2024. I think the setup is like you guys outlined this morning. We've got to see interest rates continue to roll. That will be dependent upon inflation continuing to roll. And growth we all know is slowing, but it needs to remain intact. So the consensus view now is kind of this soft to medium landing. But if you really want a differentiated view on tech, we just heard from Amazon, we just heard from Microsoft, we just heard from Snowflake and Salesforce, et cetera. They took the message from 2022, they got fit, and now they're all accelerating into the start of a new super cycle around augmented and artificial intelligence. And so when I look at 2024, I'm happy to take the other side of John's trade. We're going to have our entire portfolio in tech. Of course, we're not all in. We have plenty of shorts in our book.
This is interesting because, again, his argument here is the way tech compounds and what that means for earnings growth and how that's been kind of at that 16% for the past decade versus value at around 6% means that it's not slowing down. And if it's not going anywhere, someone saying that tech has reached the top or growth stocks are at the bubble again or at a top, maybe they're just saying it because they think it's getting expensive, but they're not really seeing the catalyst that can allow these stocks to continue to keep growing.
As well, I said at the start of 2023, we took a very contrarian position. Everybody was on board the Mike Wilson bandwagon of hard landing. We had $250 billion come out of the equity market, cycle into the bond market. The bond market ends up having a disastrous year. The stock market, if you pick the right stocks, had an epic year. And as we enter 2024, we have a little fewer dollars at risk because the setup is more evenly balanced. We're going to see plenty of opportunities over the course of the year, but our book is going to continue to be positioned around those tech companies that are beneficiaries of this new secular growth trend we have around augmented intelligence. And we're going to continue to short those industries that are being disrupted by those things. And I think that spread of 16 to 6% that we've seen over the last decade will continue in 2024.
All right. So, I mean, it's going to be a question of what do you agree with? Do you think tech's going to be right or do you think value is going to be right? Chris says bad is right 1 year ahead. The other dude is correct short term. And yeah, I think that could be correct because, again, these valuations have gotten up there and to give them it's funny because when Meta was at 200 and it went up from 88, people were saying valuations have gotten up there and they were dead wrong, right? Because we get to 338. Now at 338, the question is, if people are saying our valuations up there, are we dead wrong? Because can Meta get back to like 500 or 600, whatever it is, right? I don't know. It seems like right now is the more time to be right around valuations are getting up there than it was at 200 because we were recovering so much. But the recovery was a strong recovery. It wasn't a reversion to the mean. It was like even though Meta technically is a reversion to the mean, right? Because it hit 300 in 2021, but it didn't deserve to be 300 in 2021. That was just like stupid. These are real all-time highs for Meta. And now it's just a question if it's sustainable. Again, and you look at the numbers, they did $34 billion of revenue last quarter. $34 billion off Instagram ads. That's insane. That's insane. This is not slowing down, and this is probably not stopping anytime soon, or probably not anytime soon maybe in the short term slowing down in terms of the market valuation, but the growth is probably not slowing down, and eventually that'll get priced in over the long term. And that's, I think, what Brad's larger point is. going back to this office debate, I think you guys have not watched Dawson's Creek and you don't really understand the show. So a lot of you guys that are, Mitt is the kind of guy that watches Gilmore Girls unprompted. Ha ha ha. The jokes are funny. I get it. By the way, I tried watching one episode of Gigi and I didn't really like it. So I didn't keep watching it. But you guys haven't really seen Dawson's Creek. You haven't listened to a podcast on Dawson's Creek. I have. You haven't. It's different. It's a different world out here. When you haven't listened to a podcast on Dawson's Creek, it's going to be very hard for you to be so excited about the idea. So, I don't know what you want me to say. You guys got to give it a chance. That's it. You guys got to give it a chance. Where's Robinhood? Chris is looking at Robinhood. Whoa, baby. Robinhood, $9.03. Let's get back into the equity markets and see where we're going here. I have seen Dawson on a creek. All right, here we go. Tesla's still 233. It's down. Bitfarms up 9%. So that company is doing well. Bitcoin 38,277. That one's doing well. Enphase 100. And then the hood. Where's hood? SoFi 728. Robinhood $9.01, baby. Robinhood's up. Palantir now 1994. Palantir was at 20 just a couple of minutes ago. Oh, wow. Oh, these debit spreads are in. Oh, guys, look at this. They're up. We're up 70% on these. I don't know even if I wanted to close, I don't know if they would fill at this price, but these guys are up. They are up. Yeah, there's so much volatility and they just went down a little bit. I don't think these are probably real prices because yesterday they were at like lower prices and Robinhood was at 930. So it's probably just like market volatility. But Robinhood's up. It's continuing to do well. I wish I bought more Robinhood when I had the shot because I knew it was a good company. I knew it was a good valuation and I just didn't pull the trigger that high. But regardless, it's done well from $7.96 to $9. So Robinhood's doing well. PayPal 57, PayPal still flat. Square's done really well. SoFi 731, that's a little green. Enphase 100. Enphase continuing to be at this 100 level is really interesting because Enphase just hasn't been able to, Enphase hasn't been able to get beyond this 100 level, but it's definitely not going back to those 70 levels, or it doesn't look like it's going back to those 70 levels. It looks like it got so oversold that people just bought in and they bought in aggressively. CleanSpark is up 2%. This is a Bitcoin energy miner. They had a pretty rough earnings yesterday, at least in their stock price. I don't know the actual numbers on how they did, but they were down. Let me just share this with you guys. They were down 17% yesterday. And now they're up a little bit. So it's not too bad today, but they were obviously down. CleanSpark yesterday was at 548, down 17%. Right now they're at 640. Oh, wow. So they must have recovered after hours a little bit because for the month they were up 33%. They were at 548. This screenshot was at like 6 p.m. So that means they must have recovered because there's no way they spiked to 630, 640 that quickly. Yeah, they're only up 2% of the day. So after hours, they probably didn't end as bad as people thought it was. CleanSpark has just had a phenomenal year as a Bitcoin energy miner. If you got it in the bottoms and wrote it up, this is just one of those being in the right place, right times. Bitcoin's going up. You make a bet on a Bitcoin energy company. The stock goes up. You make a shit ton of money. And Bitcoin, went up a lot this year. So CleanSpark tended to go up as well. MicroStrategy as well is probably up today. MicroStrategy, $519. Absolutely incredible on MicroStrategy doing well. Bayrey says, don't sell these calls early, which I think you will. No, I'm not selling these calls. I'm letting them rock. I believe in Robinhood enough to, I genuinely see Robinhood at $12, $13. Like that to me is just like going to happen over the next 2 years if things keep executing the way they need to be. So there's no need to sell those. Short term, we might have a little bit more volatility, and I think we might have even better chances to get in for entry. But I think Robinhood will be fine, so we're going to leave them there. So 211 was my lowest pick on CleanSpark. MicroStrategy, MicroStrategy and CleanSpark have been really interesting this year. I want to show you guys this thread on MicroStrategy real quick because I thought this was really interesting and why MicroStrategy is actually exciting if Bitcoin goes up. So a lot of people are complaining that MicroStrategy is a ton of debt, right? And Michael Saylor bought another 5,000 Bitcoin, so now he has like 30,000 something Bitcoin. They have a lot of Bitcoin under their balance sheet. And so people are saying, why isn't he paying off the debt? And it's interesting because they don't have to repay anything until December 15th, 2025. That's the first thing. And they have convertible notes. So what it means is that if MicroStrategy stock trades at or above 130% of the 2025 conversion price for 20 out of 30 trading days, so 66% of trading days, the debt holders can immediately convert their debt into stock. This is something people don't recognize about MicroStrategy, which is what makes the debt burden, as long as the stock performs, which is Bitcoin having to perform, which is the asymmetric bet that Michael Saylor is making here, then the stocks actually, the debt is like not even a concern. So the question becomes, why would the debt holders want to convert their debt into something as volatile as MicroStrategy stock? Because if they do that, they immediately get a 30% premium to the conversion price. So as soon as they convert to the 66% moving day average of MicroStrategy stock price, which is 130% above the conversion price, they can sell it for a 30% premium, which is a lot more than the 0.75% annual interest rate that they get on the debt. So everyone's going to convert. And yes, it will be dilutive. It's going to put some selling pressure on the stock, but the debt problem will be solved. And if there's going to be a ton of like hype around the company, that sell pressure will maybe take the stock down. Who knows, right? Maybe 10, 15%. But if the stock's going to be doing so well, it's just a regular pullback, and it'll give dip buyers a better entry point to get in. So this is actually really, really interesting for MicroStrategy. So this is the conversion price. It was at $397. 130% premium would be $517. The current price is $498. 30-day moving average is $461. So MicroStrategy by December 2025 needs to be $517.39 in order for them to not have a debt problem that everyone is complaining that they have, because then it'll just be converted into stock from the people they owe the debt to. If you look at MicroStrategy right now, 517 was the price it needs to be at. Right now, it's at 521. Now, MicroStrategy is very volatile. Bitcoin comes down, MicroStrategy could come down. So, Bitcoin crashes 2025, MicroStrategy is crashing as well, right? They're not going to continue to like have the momentum. But if Bitcoin's at 50, 60 grand, and that's like the new base, and it's not, 21 grand, that was the old base, MicroStrategy is going to not have a debt problem at all. And it's actually very strategic on Michael Saylor's part. And I think he deserves a lot of credit for being able to set up that deal, but it's a big ass risk, because if Bitcoin doesn't do well, then, he's going to be in a tough situation. Jude says not buying Hood yet because it's still in a downward trend. Look at the weekly chart and monthly. I agree. I think Hood could face more downward pressure. I think the reason it went up this week is because we saw 913 on Hood, by the way, amazing 4% up today. I think the reason we saw momentum is because Vlad was very public today about, or yesterday, about the UK expansion. So that's definitely happening. Market's excited about that. But also we saw the rotation from big tech into some of these smaller names. I mean, we're seeing big tech down this entire week, and some of these smaller growth stock names are up. And so it's probably because, investors want to get a little bit more alpha where there is not a massive run up this year already. And so that's why I think Robinhood's up. It can probably still come back down. But I think, in general, long-term 2026 leaps, I think Robinhood should be okay. I think it'll be all right from these levels. Did Dan Ives come on the live? No, we'll have a live stream 11:15. Guys, the reason I'm not doing the 3-hour live stream is because I didn't get the confirmation to Dan Ives until this morning. And so that's why I was afraid to do an entire live stream waiting for him. So he confirmed to me this morning. He's a busy guy. He's traveling, all that stuff. So we will have him 11:15. We'll have him for probably a good 25 to 30 minutes. And we'll talk Palantir. We'll talk Tesla, Cybertruck. We'll talk his thoughts on Microsoft, where Palantir is going, what he thinks about valuation, where he sees this new world geopolitically going into around defense. He obviously has some thoughts about Israel. So 11:15 a.m. If you guys can make it, that's awesome. If you can't, you can catch the live stream. But I will be here live, and we'll be talking to Dan Ives. Last look before we leave, let's take a look at Palantir. Palantir 1999. So Palantir, again, it's stuck between this $19 to $20 level. I am okay with that because it's creating a base, which is what we want to see. We don't want to see it go down to 14, 13. We want to see it stay at these levels and then be able to make the next leg up from there. So we'll see what happens with Palantir, but Palantir's still a decent week holding on to these levels and not going back down lower into that $17, $18 range. All right, Palantir 1997. That is it for today. Let's do the word of the day, and then we are done. Please don't hate me for the office slander that I gave out. I have to be honest with you guys. I feel what I feel, and I should probably give the show a chance. I'm too busy to actually watch the show, so maybe in 5 years when I have free time, I'm gonna legitimately watch it, and I'll give you my updated opinion on the market open in 5 years, because I will be doing the market open in 5 years. I'm never stopping the market open, but until then, the office slander has to continue. Escicate. Exicate. Why was that word so hard? Escicate. I was like, escicate, to dry up. So, I mean, if you ask my girl, she never escicates when I'm with her. So, yeah, that's my use of the word of the day. So we're now I know some of you guys dried up when I said my office stuff, but I could say anything to my girl. I don't have to. I could say whatever slander I want. She's not going to escapade. You know what I'm talking about? All right, that's it for me. 11:15 a.m., folks. We are having the market open part 2 with Dan Ives. He'll be here, and we'll be talking to him. Palantir, Tesla, Microsoft, Apple, a lot of good stuff. If you can make it, that'd be awesome. If not, thank you for joining every single day of the week for those that have been here. I think we've been averaging 700 to 800 people every single day. Kind of surreal that that's happening, but for the past 55 shows, that's pretty much been the average. Really, for the past 30 shows, the first 30 was like 300 to 500, and now we're in that next level, and just got to keep growing. I love doing this every day. You guys know I love doing this. This is exciting. This is fun. This is literally like the coolest fucking thing in the world every single morning that I get to do. So I'm excited to keep doing it, and hope you guys keep enjoying it every day and get the excitement and exuberance of the market open as we discuss. Oh, look, my girl's in the chat calling cap historical fiction on my escacating arguments around her, even though she's capping in the chat. But it is what it is. She can cap if she wants to look cooler than me. 11:15 we'll be live. 8:15 Eastern Standard. PST. Yes, 8:15 PST. No, 11:15. Yeah, in California. In California it's 7 a.m. for you guys. So 8:15 your time, 11:15 my time. We will be live with Dan Ives and keep going. I'm still saying it wrong. I know. The soy descent, the gatao, all these words this week have just like made me go crazy. Hold on. I got to show you guys Wendell's comment, bro. Wendell's comment was the funniest comment yesterday. Wendell, when I said like stop at a French company or a French party or at a birthday party and say, and like stop the world to like say gatao. He was like, Amit, you can't do that. There's so many better words than that. This was hilarious. I got to show you guys this. He was like, if you're going to do it, at least do it for like a good word. Yeah, so this was the comment. He says, please don't try to exhort anyone to stop a party to focus on the French word for cake. Try something else like debonair, le mot juste, or poussiant. And so, speaking of my girl, I texted this picture to her, and I was like, poussiant, huh? That's a hell of a word for cake. Next time we're at a party together, we can talk about the pussy aunt when someone brings out the birthday cake. All right, that's it for me. Thank you, everybody. I'll see you guys 11:15 a.m. with Dan Ives. Thank you, everybody. Bye-bye. See you guys later.